It's about that time of day again. Welcome back to your nightly newsletter, boys and girls. Joseph James here. It's Thursday evening, July 14th, 2016. We have some great opportunities going into Friday's session with some very big news on the schedule tonight and another big day ahead of us tomorrow. Crude oil is range-bound, E-mini S&P is bearish, gold is bullish, and boy, the euro still looks a little punch-drunk after a complete roller coaster ride it went on early in today's session. Got a great newsletter in store for you guys. We'll check the calendar, get ready for tomorrow's schedule. We can look at the charts in just a moment. Before we jump into our newsletter, though, I do want to remind you the only place to watch the full-length version of this video is here on our blog at sidewaysmarkets.com. If you're watching the video right now on our YouTube channel, there's a link in the description of the YouTube video. Follow that link, come over here and join me on the blog and watch the full-length version with all four markets and analysis for all four of them. While you're here, don't forget, grab your free pass in the upper left-hand corner. If you're not a member here at School of Trade and you'd like to grab a free pass, come out and join me in the trade room this week or next as a guest. Grab your free pass in the upper left-hand corner. Also, don't forget to register for the mailing list. Lower left-hand corner, name and your email address, and I'll send you an email every evening when the nightly newsletter goes live. Also, you can download all the charts that you see me using in tonight's video. Follow that link right below the video on the blog. And as I always remind you, you're going to learn more with me in 1 week on my trial than you will anywhere else on the interwebs. I can guarantee you that. Join the trial membership on the right-hand side of the website. And I'm always standing by here to help you guys out 24/7, 365. Hit up the live support button on the right-hand side of the website if you have any questions. All right, looking good here. Boy, what a great day today. What a great week it's been. Boy, I'll take this for the rest of the year 2016. Get some great moves going on right now in London, in US, in the Asian sessions. Hope you guys are having a great week right along with us. Let's check the schedule for tomorrow. Tonight, of course, is Thursday evening. We talked about this in last night's newsletter. We do have some big news coming from our friends in China. 10 p.m. Eastern time tonight, we're going to see the GDP, industrial production, and retail sales, right, coming from China. That is expected to move the needle across all four of our markets for tomorrow. And then we go into tomorrow morning. We have some minor news tomorrow from the EU at 5 a.m., but then really it's all about the U.S. session tomorrow morning. We get consumer price index, we get the retail sales at 8:30. Those are two big news events tomorrow morning. Industrial production at 9:15, and then we got some minor stuff here, 10 a.m., business inventories and consumer sentiment before we wrap up the session, wrap up the week, and hit the weekend. Big news tonight coming out of China. That's the most important piece of this puzzle. Most important thing tonight is coming out of China at 10 p.m. Eastern time. And then tomorrow morning, we'll definitely get another shot in the arm tomorrow morning, Friday morning at 8:30 a.m. We got some consumer prices and retail sales. Always a big number before we go into 9 o'clock and 9:15 for the industrial production. One word about Fridays. Fridays are always an early in, early out day in the U.S. session after 11 a.m. Eastern time on Friday morning. No new positions. We're more than welcome to keep open positions and protect our capital and take some profit in the afternoon, but I do recommend be very careful entering into new positions after 11 a.m. Eastern time. Not only do we tend to be making bad decisions after 11 o'clock, right, with the weekend looming, but you know what I always remind you, the end of the week, the end of the month, the end of the quarter, the end of the year, traders take bigger risks. There's a lot of different psychology that goes on at the end of the week because traders are either way up on the week and they're playing with house money, right? And not my opinion, right? But traders do make that mistake of trading with quote unquote house money at the end of the week, or they're digging themselves out of a hole at the end of the week and they're taking bigger gambles, right, on their trades. So be careful tomorrow morning. If you're in London, no problem there. But if you're trading in the U.S. session, just be careful after 11 a.m. Eastern time as the volume starts to dry up. Again, we tend to make bad decisions. We take bigger risks as the week comes to an end. So protect that capital, keep that profit in your account, hit the weekend, and of course, we'll come back and do it again on Monday. Don't forget, we don't have a newsletter on Friday afternoon. So the next time I'll see you guys for the nightly newsletter will be next Monday evening. If I don't see you, of course, tomorrow morning in our live trade room at 8 a.m. Eastern time. Let's jump into it here right now as the Asian session opens up. We'll go crude, S&P, gold, and we'll wrap up with some euro. Crude oil is trading inside a range with a slight bullish bias this evening. Although we can see the bulls appear to have the edge over the bears, the double tops and double bottoms tell us the range will be the most important factor going into Friday's session. The range tells us to look for rotation off the highs, back to the lows, but we can also see the bulls barely miss that measured move target by only a few ticks this evening, which tells us they may give it another shot to finish the job back up to 45.85 before we get the next move back to the lows. Buyers have the edge and will be looking for a strong breakout pullback at the highs above the measured move or seller failure at the range low. Sellers need to be careful, and we'll be looking for buyer failure at the high or got to be a strong breakout pullback at the low, because we assume there'll be plenty of buyers waiting to buy the range lows, right? So the breakdown will need to be strong if you're going to be a bear at the lows of that range. As you can see here, we got a couple different components here. There's really not a lot on this chart besides the range. The range, of course, once we see those double bottoms, we see those double tops and double bottoms give us a definite trading range. And when there's a trading range, we know that takes center stage. We know that takes precedence right now. With that said, a trading range ultimately tells me, grab that range here. First of all, a trading range ultimately tells me if there is a bias to it, and there is a bias on this particular trading range. If there is a bias, we always want to try to follow that directional bias. For crude oil, we have a slight bullish bias, which means we're looking to buy the low of the range as the most reliable trade. You can also look to buy the breakout pullbacks, but most of the time breakouts fail of trading ranges. So again, if there is a bias, we'll have to follow that bias. The second thing is to expect rotation. And of course, rotation means from the high to the low to the high to the low to the high, right? And keep rotating back and forth. So follow the direction of the spike, look for range rotation. We are now coming off the high of this range right now, and so the next step will be rotation back down to that low. What else? Focus on failures. If we do make a move back up to the high here, or should we say, if we do finish off the measured move, we then will look for buyer failure for a selling opportunity back down to that low. Once we get back down to the low, a seller failure at the low for a buying opportunity back up to that high. Again, with the bull bias, this becomes the more reliable trade. Focus on failures. Seller failure at the low, buyer failure at the high. What else? Last but not least, the pendulum swing. If we are able to, let's go back out here. Let's say we break out a little bit higher, right? And we keep making our move higher here. And then we pull back and fail back down. The amount that we break out of that range will result in the pendulum swinging all the way back down. So think about the pendulum, right? Remember, what makes a range-bound market is balance. And so think of that pendulum right in the middle as this market tries to break out. If it fails, it's probably going to make a run, right? Not only back to the low of that range, but it will usually find a way to get through that range low. And we call that the pendulum. So, most important pieces to this puzzle: follow the direction of the bias, range rotation, buying low, selling high, focus on failures, right? Buyer failure at the high, seller failure at the low, and then remember that pendulum swing, right? The higher it goes, right, the bigger it breaks out and fails, the more we expect it to break out and go in the opposite direction before coming back into that range. Now that we can see back on this chart right now, we can definitely see, right, the bull bias into that trading range. There's our range. We're expecting rotation, low to the high to the low to the high back down to the low. Again, we do have that measured move that they barely missed. Like I say always when it comes to ranges, the range is always going to be the most important factor, right? So the measured move is really just an area of resistance overhead, just like these trend lines you can see that I've drawn in. That's going to be support. That will be resistance. And so although there is apparently a channel here, you'll notice if you look closely here, guys, we're not getting rotation. We're not getting rotation. The range definitely takes precedence, but those trend lines will be considered support below and resistance above. So assuming here now that we get the breakdown of the low, we have to assume with that bull bias on it, buyers will be looking for seller failure to go back to the high. As we try to go lower, we'll give those sellers, they're going to need a strong breakout pullback to run this price down to the next target at 44.32. So as this price goes lower, at the low of that range, seller failure for a buying opportunity, and then of course a strong breakout pullback, much lower reliability, down to that 44.32. Now, if they do get that successful breakout pullback below that low, watch out, because if it can't get to 44.32, that's where the failure comes in and we go back in, and that of course now is where you'll be looking for the pendulum swing all the way back up on the opposite side, right? So keep that in mind. The sellers have to be very careful selling that low. As we go higher here, measured move, buyer failure, back down. As we go higher, strong breakout pullback. This is where you got to be careful not to get chopped up between the high of that range and that measured move. Just be aware what you're really looking for is that breakout pullback to hold above that measured move, and then of course for a move up to that 46.48. Heads up though, again, if they do hold that pullback but they can't get to that 46.48, now those sellers are looking for a failure to go back down in. And again, although it's lower reliability because of the bull bias, that of course now brings up the pendulum swing, right, for that move back down again. Ranges, focus on the directional bias, focus on rotation. Again, rotation right now expecting to put us back down to that low where we'll look for seller failure to buy it back to that high, or strong breakout pullback. If they don't get to the 44.32, if they don't get to that 44.32, watch out for a move back up to the high of that range, and of course the pendulum swing rolling back through those highs to get a breakout pullback, right? And then up we go to 46.48. Trading ranges are always about balance, right? So remember to focus on that balance, returning back to that original range until we see some strength on a strong breakout pullback. Either way, it doesn't really matter, but right now the bulls definitely have that short-term bias, and we'll look to use them accordingly tomorrow. Don't forget, we'll be with you guys in the trade room tomorrow morning, 8 o'clock Eastern time, and we'll do it all together. Now that was the easy one tonight. The rest of these markets, gold's pretty easy as well. E-mini S&P and Euro are a little bit chaotic here right now. E-mini S&P is bearish in the short term as it pulls back inside a bull spike and wedge this evening. The bulls started the session with a strong spike higher today and then proceeded to buy only on traps below the previous swings, which tells us that buyers aren't confident yet in buying high, and they're looking for a cheaper price as it goes lower. Buyers will be looking for traps at the lows and seller failures at the moving average, and will wait for proof of a strong breakout pullback before they buy the next move higher. Sellers will be looking to fade all the moves higher until the buyers can hold a breakout pullback, and they will also be looking for a breakout pullback below the wedge support at 21.48 for a move possibly back down to those lows. As you can see here, what a strange looking chart this evening. Now, obviously we have this a little bit ridiculous the way it looks right now, but hey, as long as this C point doesn't change, this is our measured move target back up at 21, right? Up at 21.78 and change. Obviously, that measured move seems a little bit ridiculous right now because, as you can see, every time this price is pulled back, trap low, trap low, trap low. Every time price pulls back just below it, it gets bought up. So buyers are clearly interested, right? But they can't have a lot more left in this tank. So right now, the buyers really have to either focus on buying those dips, or you really got to be careful here. Wait for that price to break out and pull back. You'll notice they have not been able to hold the breakout pullback. Only twice now they've tried to get those breakout pullback, 3 times I guess, right? Breakout pullback and failed. Breakout pullback and failed. Breakout pullback and failed. So until something changes, we have to assume here now the buyers do not see value in this higher price. And although that strong spike higher gave buyers a reason to be buying the dips, it's very difficult for us to do anything buying high until we see some significant proof. Now, as this price goes higher, we're definitely expecting to see sellers look to continue to fade this move higher, right? We're definitely expecting to see those sellers keep trying to fade that move higher with a wedge.